Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. So far, the Australian dollar has remained in many battles with the US dollar over the past year as it trades near the lows last recorded back in 2016, with the multi-year low posted so far at 17.97. Yesterday, China released its August inflation data, which came in better than expected at 2.1% to 2.3%, a 6-month high. During the up-and-coming session today, the Australian outlook to release the NAB's business conditions. At present, it is assessed that the Australian dollar pair is stuck in the bearish trenches and potentially could slip lower since the confirmation from last week of the 71.40 break. This now exposes the region back in 2016 of 69.40.80 as the objective. Still looking towards this downside. The immediate support at this stage comes in at 70.60, with the resistance capped at around 71.60 to 72.10. Well, the euro found a little bit of momentum overnight after bouncing from this level of 115.20.30, but hasn't quite claimed to a bullish outlook because the RSI midway point is still capping the indicator from progressing or any suggestion that the price will move higher. I still expect to see further challenges to the downside and therefore could look towards the region of 115.55 to 115.20, and a break beneath there will give us 114.5 or maybe down to 113.70. The strategy is still sell into rallies towards 116.25 to 116.75. The dollar-yen story is still remaining sideways, as you can see here, but it has recaptured slightly some momentum in the last 12 hours. Nevertheless, I do expect to see profit taking to come back into play from 111.45 to 111.80.90. With any downside challenge, a break of 110.75 could see further risk to the downside. I'm not overconfident on this move because of the weeklies as well as the dailies still portray a pretty much flat indicator from the MACD. But it would seem that further Brexit comments from the EU chief negotiator Barner, and he said that there is more of a realistic Brexit agreement on its way between now to 8 weeks. Therefore, could see further momentum to the upside. We haven't completely broken this level of 130.40 after getting a high of 51, but the market is still, at this point, holding to bullish indicators you can see from the MACD. If we see a break of 90, and no doubt stops will be triggered there, then we could see further towards 131.60.80 to 132.50.80. Gold still not going anywhere. Most now likely, as I feel, that we're waiting for the FOMC rate decision, which is on the 25th to 26th meeting. The market will be assessing whether there is a fourth rate hike locked in for December, with September already locked in. Still, from a technical point, I can't trade this market, so I'm neutral until we get down towards 1,780. And rounding off with oil, well, to the 2 stabs at $67 a barrel does give some concern that the market is weakened again overnight, with the MACD now confirming a bearish signal and also may soon negate this hammer if we get another break of 67.10 or 11, and underneath that 67.10 is that we could be looking towards the region of $65 to $62 as a potential target. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.